All right, good morning, good morning. How you guys doing today? Bobby T, nice to see ya. Ron C, thanks for sharing the post. I woke up feeling all just warm and fuzzy this morning. That was kind of nice. Hope you guys are doing well. Hope everybody had a great weekend. Um, Hope you relaxed a little bit, did a whole lot of nothing, or did a whole lot of something, whatever makes you happy, right? Hey, Michael, good to see you. Had a great weekend. I did an enormous amount of study this weekend. Um, really spent a lot of time, replayed Saturday, replayed Sunday, and just really bugged the ever loving snot out of my brother, which was a lot of fun. But feeling well, love it. Um, I'm going through his seminar that he's teaching and trying, and it's funny because it goes so outside of what I normally do as a trader. My trading plan has been what I teach in this room for so long. It's really going next level for me, and it's been a lot of fun being in a student role. But you have to have a foundation, and that's what this classroom is designed for. This classroom is designed to be the foundation for you guys. I see some names that I haven't seen in here before. T-Bird, welcome. Shaq, good to have you back. James Bird, it's the day of the birds. Good morning, Cav. Nice to see you. Um, Guys, we're going to have a good one. Short week this week, right? Turkey Day on Thursday. I don't know what it's going to do to the market. I have absolutely no idea how it's going to affect the movement of the market. I don't worry about things like that. I worry about my patterns being true, and when they are, it's time to take a trade. So let's get into the day. I don't even know what to expect today. So we're going to have some fun. We're going to watch the live market. I'm going to watch a couple different markets. We're going to talk extensively about advantages. And hopefully you guys post an awful lot of pictures. Give me something to talk about. But before I do anything, same thing I do every day. And of course I did this at 6 in the morning, but I'm going to do it again with you guys. I'm going to go to forexfactory.com/calendar. There's the link for you. And every day I'm checking for news. Every day I'm making sure that there's not some sort of announcement that could adversely affect the market, make them react, make them jump, bump, spike, or just really become too fast to trade. Cheeseburger index today. I love it. You sure that's not ciabatta bread? Could be. I don't know. But like Ron saying, 10 a.m. guys, the CB leading indexes are coming out. I don't know what a CB leading index is. I'm not concerned about it, and it's a low impact, so I'm probably not going to pay too much mind to it. But as I go through the calendar, I'm looking for these medium impacts, existing home sales tomorrow. Tomorrow there's also FOMC meeting minutes at 2 o'clock. This can make the market go a little kooky crazy. So I make the choice to not trade into news. If you're with one of those prop firms, if you're with Apex or Top Step, they insist that you don't trade into major news releases. They'll actually shut you down if you do. So keeping eyes every day, making sure that I know where the news is. And then anything and everything that I talk about comes from the education page, the Nexgen education page. There are no secrets, guys. I know it's fun to believe that there's these secret handshakes beyond. I'm going to give you everything that you need to be successful. I'm going to give you everything that you need to be consistent. I'm going to give you everything that you need to create a plan that has the potential to win more than it loses. It gives you the potential to make the money that you want to make. And it's all right here in the tutorial section. And it's going to talk about rules and live streaming and a bunch of different things that you can do. But I'm going to go to the glossary of common terms first, guys. And I'm going to tell you exactly what our first hour consists of. And it's a high probability trend trade. This classroom, the first hour is the same hour every day. And it has been for the last couple of years. I'll tell you, we're doing this because we're going to lay down the foundational work in the first hour. We're going to focus on a high probability trend trade. We are going to look at this trade because when you follow the rules, it's a trade that typically wins 70 to 80% of the time. This is the trade that's going to create that confidence through the memory of success. And this high probability trend trade has the ability to turn you into a chart reader. And becoming a chart reader is so important. Hey, good morning, Carl. Becoming a chart reader is so important because 90% of your day is going to be reading those charts. 90% of your day is going to be looking at your indicators. It is going to be making decisions on whether or not advantages are present. And 10% of your day is going to be taking the trades. 10% of your day will be saying to yourself, hey, the advantages are present. It's time to enter the market. And you're building a discipline by knowing going into it that you're going to spend more time waiting than trading. You're a professional waiter. You're not a day trader. Your ability to read the charts is going to let you know when it's time to pull the trigger. Your ability to read charts is what's going to get you in. And you're going to be able to understand some really key concepts. You're going to understand where the market is likely to continue. This becomes your entry point for those high probability trend trades. You're going to understand where the market is likely to go. And this is going to help you take profits at the correct spots. And then finally, you're going to understand where the market is likely to stop. And this is going to do two things for you. Where the market is likely to stop is what we call termination conditions. And termination conditions are one of the most ignored factors in what we do. Termination conditions can stop the market. It can reverse the market. Good morning, Debbie. Termination conditions, this big red line that price has reached, can keep the market from going any higher. The same way Fibonacci support down here set up the reversal. And we're going to look for these termination conditions, these areas where the market is likely to stop. And we're going to use it not only as a giant red flag to not get into the market when it's reached, but we're going to use it as a reversal point. We're going to use it as an indicator that it's time to look for opportunities the other direction. And that's really what we're going to talk about for the first hours. We're going to talk about these concepts, where it's likely to continue, where it's likely to go, where it's likely to stop. We're going to put it all together with the high probability trend trade. And the high probability trend trade is a trade that only has 3 rules, which is pretty easy for the brand new user. It's 3 pretty simple concepts. I'm going to break them down individually. But each rule provides an advantage. And the advantages are what create the trade, not the other way around. So rule number 1, strong triggers, is going to give you the advantage of momentum. The advantage of momentum leads the way. And when you have momentum, areas break. When you have momentum, the market's likely to continue in the direction of the trend. So we give ourselves this huge advantage in rule number 1. Rule number 2 is making sure that we haven't hit any of those likely to stop areas, no areas that can create a bounce or indecision in the market. And when this rule is true, we have a clear path. We've got a straight shot between us and our target. These first 2 advantages set the tone to look for an entry. And rule number 3 is your entry rule. Rule number 3 gets you into the market at the point where it's most likely to continue. Rule number 3 allows you to minimize risk. It allows you to maximize your profit potential. And that's the final step, making sure that you have the first 2 and then looking for the entry because of that. And then just in the sense of simplicity, in the spirit of simplicity, these 3 rules are going to happen on only 2 charts. It only takes 2 time frames to get you into the market. The large chart leads the way. The large chart tells you what you're going to be doing. The large chart is a representation of the large crowd. The large chart is the people that move the market. It's the people that make it go up and down, the people that react to these key areas. Your large chart is going to define areas, direction, momentum. And it reflects the large crowd opinions of the market, guys. And the large crowd typically wins. We're going to use that large crowd. This is our large chart. And then we will refine what they say by utilizing the small crowd, by looking for the group of people that fight everything that the large crowd says. So the large chart will define the direction of the market. It's going to let you know whether you're looking for long trades or short trades. The large chart is going to define the momentum in the market. That's rule number 1. It's going to let you know that advantage is present. And the large chart is going to define the areas that we trade to, that we trade from, and that we never trade into. All of this happens. Rule 1 and 2 is on the large chart. It's a broad stroke of a brush. You're going to use the most current bar, one bar on the large chart. And that one bar is going to give you all this information. When you have it, when rule 1 and 2 are met, when you have momentum, when you have a clear path, you're going to turn your attention to the smaller, faster chart. You're going to look at that chart that seems to fight what the large chart says. And you're going to refine that broad stroke of a brush. You're going to take one bar from the large chart, and it's going to become 15 to 30 bars on that smaller, faster chart. You are literally going to refine down to a point where the market is most likely to continue. Rule number 3 is going to get you in at that point. It's going to allow you to minimize your risk. It's going to allow you to increase your profit potential. And rule number 3, the small chart never even gets looked at until the large chart does its job. So this is what we're going to talk about for about the next 45 minutes, guys. I'm going to take the 3 rules. We're going to do it on the small and the large chart. And I'm going to remind you right now, your path, and this is for you newer folks. Shaq, welcome. James Bird. The name sounds familiar, but I don't always remember. If you've been here for a while, I love it when you guys get back in. Good to see you. Craig, as you grow with it, guys, post your trades in class. Every trade you take, post it in the room. This is the key to getting to where you want to be. And I apologize for the black and white, but it's kind of cool. Tell me why you did what you did, guys. And there's no wrong answers when you post in the room. Every mistake becomes a growth opportunity. Yeah, I'm never going to go, oh my gosh, I can't believe you did that. I'm going to say, cool, let's look at it and let's talk about it. So tell me why you did what you did. Show me where you got in. Tell me why you got in at that point. Show me where you get out. Tell me why you got out at that point. And guys, if you give me this little bit of information each and every time you post in the room, it opens the door for a great conversation because it's going to let me know what's going on in your head. And it's going to allow me to work with you to create better chart reads, to get you into the market at the most optimal spot, to make sure that you have the best of the best advantages. And I really need to go get a colored picture of that because it's weird. And we're going to take the first hour. Oh, this is it, T-Bird. You are in the 9 a.m. education room. So what we do here is we spend the first hour talking about rules. We're going to learn the trigger line and Fibonacci rules for when it's okay to trade. As we go into the 10 o'clock hour, we start looking at y'all's charts, the live market, incorporating the rules that we cover, and seeing them being used real time. So it's kind of a 2-part. The first part of the hour is a little more lecture, building a foundation. Awesome, cool. And then the second is the feedback. So posting trades is the first thing to do to become a confident trader. The second thing, guys, is use that spreadsheet that Nexgen gave you. I fought this one tooth and nail as a brand new user because it felt like a lot of work. And I know that's a little embarrassing, but it's true. But every time you take a trade, the spreadsheet's got 3 tabs on it. And the first one is copy of my tracking. Every time you take a trade, it goes in here. Every time you pull the trigger, win, lose, or draw, it goes into this trade diary. And what you're going to do is every morning, you're going to go back and study what you did yesterday. You're going to look at the trades, at what worked, at what didn't work, what made you relax, what made you nervous. In this little historical study each morning, guys, it sets you up for the day. It will accelerate the learning because if you use the notes section, if you post in the room and I say, hey, you traded into a termination condition, make sure that finds its way into the notes section. Or if I say, gosh, this is the best trade ever, great job, all the rules are met, make sure that makes it into the notes section because this notes section is going to have you identifying the patterns that are bringing you success. It's also going to help you identify the patterns that might be stripping you of that success. Once we learn the rules, you're going to simulate. That's what's going to get you to posting. And the idea is that you trade the correct rules because the correct rules have been proven to provide a statistical advantage. The correct rules are loaded dice, guys. They've been proven to win more than they lose. When you win and the rules are wrong, it's a short-term victory. It feels good, but very often it's a path to long-term failure. We're going to simplify a lot. We're going to simplify down to the high probability trend trade. I'm going to give you one trade initially, And then we're going to talk about one more trade before the day's over, something that we call a medium probability trade. And a medium probability trade is defined when most of your indicators line up for a trade. However, a small issue exists. Your chart reading is going to define which one of these advantages is gone to create that small issue. And when you take these medium probability trades, you're going to have to manage them assertively. Your chart reading will allow you to do that. You'll take quicker profits. They tend to not be home run trades in all situations. So we're going to keep it focused. First, the high probability. We're going to become chart readers. And then we're going to move into that medium probability because you will have the foundation to be able to manage these. And this is our plan for the day, guys. We're going to go through it. We're going to talk about it. We're going to look at a lot of pictures. I'm going to give you a lot of stuff in the room that you can steal, whether it's a plan, whether it's a checklist. But the idea is that we learn the Fibonacci and trigger look so that they're easy. And repetition makes things easy. So as you take trades and they fit the rules and you get the feedback, fill up your personal trade setup looks. This is where you're going to begin to build a plan that suits your needs. And then I have, over the last year or two, been stealing pictures from Nexgen users. And there's about 275 pictures of great entries using the software, taking the advantages. This is an outstanding study tool for you. So I'm going to give you my checklist or my spreadsheet here. And I use this for training throughout the day as well. I'm going to talk very much about entries, about management, and everything that I do, I'm going to pull it from that spreadsheet. It's a pretty complete journal for you. But we're going to start at the beginning. We're going to start on the large chart. And let's look at strong triggers. And let's define exactly what strong triggers means to us. Let me find my picture. One of the first cool phenomenons is you can't have strong triggers if the triggers don't match the background. So when we're looking for these high probability trend trades, if the background is green on your large chart, we're only looking for rules to be met for high probability trend trades long. And if the background is red on your large chart, we're only looking for rules to be met for high probability trend trade short. And this really eliminates the burden of opinion, and it keeps you focused on the best of the best. And then once you have that green background, we're looking for both green, small, and large triggers. The small triggers are these solid lines. The large triggers are the dashed lines. They're moving averages. I don't know much about the mathematics that create them, but I sure know how to read them to get an advantage. When your small triggers break above and away from the large triggers, this space is created. This is what we call a strong trigger look. It's really pretty that simple. When the scissors open is how I like to see it. They're ready to cut. You can get some work done. And when I have strong trigger lines, the odds are favorable for the market to continue up. And you're going to hear in this room all the time, odds favorable momentum. I had odds favorable momentum. OFM will be the acronym. And you're literally looking for pullbacks on the smaller, faster chart to go with that trend, to go with that momentum. And you're going to see them in the one bar analysis as a tail or a wick. Every time you see one of these black tails, it is a pullback on a smaller, faster chart where you've refined it. And you will be able to pinpoint where the bottom of that tail is most likely to happen. This becomes your entry for the highest probability trend trade. So in a long scenario with strong triggers, it becomes the most advantageous look to buy Fibonacci support. And then in a short scenario, when the background is red, when the smalls are below the large and everything is wide and angled down, this is the most favorable look for selling Fibonacci resistance on that smaller, faster chart. You'll see those tails. Rule number one is going to hide mistakes. Rule number one is going to allow the market to break through areas. Rule number one should always lead the way, because when you have that momentum, life gets easy. And rule number one is intact right until the smalls work their way back inside of the large. We're going to call this a weakening of the large triggers. And when you weaken large triggers, anything can happen up or down. I'm a big fan of the language there. Strong triggers, odds favorable for the market to continue. Weak triggers, anything can happen up or down. So this is a great patience piece. 90% of your day is spent reading the indicators, guys, and you'll find But if you just open up a large chart and scroll back, let's do that instead of this picture today. Let's use the live market for examples. I'm going to take everything off of this chart. This happens to be crude oil. And what I teach, the patterns I teach, are effective really on any market, any time frame. But I want you to see something. This looks exactly like the picture that I took a year ago for this classroom. Smalls outside, the market continues down. When you get the reversal, odds favorable, there's your entry, guys, 1806. Goes all the way up to weak triggers where the market pulls back. And dollars to donuts, there's a mid band right here. The market continues up, odds favorable momentum. There's your tail. There's your tail. There's your weak triggers. Reversal, odds favorable, tails all the way down. Guys, this is your advantage. And that separation is what pushes the market. There's a tail. And then we start to lose it. It gets weak. And now the market's on its way down with odds favorable momentum in the moment. It's what you do when the advantage is not present that is going to define your day, guys. It's what you do when there's nothing to do that's going to define your day. So I'm going to ask real quick, especially for my new users, is everybody cool? Odds favorable can push it down. Anything can happen, tends to precede a reversal. Anything can happen, precedes a reversal. Odds favorable is what pushes it. And then these are those moments where there's indecision, guys, where the triggers don't match one another. Sometimes they don't match the background. This is where buyers and sellers fight. This is where the typical trader gets chewed up a little bit because they tend to try to predict rather than waiting for an advantage. When nothing lines up, when they're not all the same color, guys, sit on your hands and do nothing. Let them fight it out. Ultimately, somebody's going to win and give you that odds favorable momentum. But this becomes a great safeguard for the Nexgen user because rule number one's not met if everything's not the same color. So guys, that's rule number one. This one provides you the advantage of momentum. This one should set the tone for everything. And I can't stress enough. Momentum, it fixes things, it breaks things. Momentum is freaking amazing when it comes to trading. Rule number two says don't trade into those lines that could stop the market. That's the easiest way to say it. Termination conditions false. And the lines that we're looking at are red Fibonacci resistance, those red fibs, blue Fibonacci support, yellow 1-to-1s. And these are the solid concrete Fibonacci lines. And then we're going to also recognize and look for divergence high lines. This magenta line that lets me know there was a loss of momentum at a pivot from a high. And these divergence low lines, these cyan lines that let me know that there was a loss of momentum at a pivot from a low. And we're going to use these lines to make sure that we haven't reached a termination condition, that we do have room to our targets. And we're going to do it with a simple recipe. And this is it 100%. When price reaches one of these areas, in this case, price reached Fibonacci resistance right there, guys. These price bars come up, hit the area. This is the beginning. Price reaches the area. All you have to do as a Nexgen user is ask yourself, where are the trigger lines? And if they remain below resistance, no more long trades. And guys, look what the market did right off of that key area. If price reaches an area and the triggers remain below resistance, or let's go find one at support, triggers remain above, can't break through support, no more trades into that area, guys. And it really becomes a simple idea. Resistance met, no triggers break, sit on your hands for a moment. There's nothing to do. Resistance met, look at the giant bounce. There's your reaction. When we looked at momentum, I said, I bet you there's a mid band there. Everything is a pattern. And then look how support with no triggers through fueled the market to go up. Guys, this is a huge advantage for you, and this becomes a pretty easy recipe. Recognizing these termination conditions gives you the advantage of knowing where the market is likely to stop. And if we go to the tutorial section, we're going to walk through a couple different ideas here. Price reaches Fibonacci support. No triggers break, no short trades. Is everybody comfortable with the simple recipe? Let's keep it as basic as we possibly can at first. When not to trade into an area. If price reaches an area and no triggers break, Sit on your hands and do nothing, guys. There's going to be a bounce. There can be a reaction, right? We don't have to gauge it or guess. If we wait for an area to break, it's going to provide us the advantage of a clear path. So when is an area broken? Up here we have Fibonacci support. Let's draw some arrows. I love arrows. Maybe more than I should. Up here, price reaches Fibonacci support. And when it does, none of the triggers break. Everything is still above. Notice that there's a lot of momentum, but in the moment, we just don't know what's going to happen, so we sit on our hands and wait. When the small triggers smash through an area with all of this momentum, guys, this area now has the potential to break. We're going to walk through it. 50% of my trigger lines have broken through the area, but 50% of them remain above. The large triggers are still above support. So while this has the potential to break, it hasn't broken yet. This is what we call a 50-50. This is going to be your first medium probability trade because the path isn't clear. But once your small triggers and your large triggers get below support, you can see that support now acts as resistance. All of my triggers are below. Odds favorable momentum. And guys, this is pretty cool. You guys are going to be able to pinpoint right where the top of that tail is most likely to happen. And this becomes your highest probability trend trade. So no triggers, no trade. Small trigger with odds favorable momentum. It has the potential to break, but it is not broken. It's not a clear path. When both small and large get to the other side of an area, now we consider the area broken. Now we're looking for the rules to be met for the high probability trend trade. We're looking for odds favorable momentum. We're looking to make sure that it hasn't yet reached Fibonacci support. And if the rules are met, that fib off in the distance becomes a target before it's ever returned. That's where the market is likely to go. And you're going to see this happen all day long, guys. A loss of momentum creates this divergence low, but because price creates the line, it has not reached the line. It's not a termination. When price reaches a divergence low over here to the right, and all the trigger lines remain above, it's a termination condition. Don't trade into it. There's no reason to trade into it. You just don't know what's going to happen. This is what we call a pivot stop out, guys, and these are powerful. A pivot stop out can reverse the market, and if it does, we're going to call it a strong bottom. A termination that reverses the market is a strong top or bottom. It's your highest probability trend trade long that happens after a termination condition from a low. So you've got to get pretty good at gauging these. Price reaches Fibonacci resistance. The trigger lines remain below. Guys, this picture from 2021 looks exactly like what just happened in crude oil. The price moved all the way up to Fibonacci resistance. The trigger lines remain below, and you guys sat on your hands and said, hey, I don't have to predict what the market's going to do. I know that I shouldn't go long here. I'm going to sit on my hands. And the market pushes all the way back to support, and the trigger lines remain well above. I'm gauging trigger lines and areas. So I'm not going short into support. I couldn't go long into resistance. We're working our way into that 90%, guys. That 90% where if you sit on your hands and do nothing, it's going to define your success as a trader. Ultimately, the market pulls back up to resistance, a divergence high, and a second resistance. We get one of those pivot stop outs, which is powerful. And when you take a pivot stop out and you couple it with Fibonacci resistance, holy smokes, it's even more powerful. This termination, or actually three of them, reverses the market. It creates odds favorable momentum, and there's room to get back to that Fibonacci support. This little tail right here, guys, is your highest probability trend trade. This is your 10% as you sat through the 90 waiting for the advantages. Once again, I like to use the arrows again on this one because this illustrates just how we're not sure what's going to happen at these areas. But these areas are where the buyers and sellers react, guys. And the sellers, let me get one that you can see here. We'll go hot pink. I missed the 80s. The sellers are in control. The sellers have odds favorable momentum. The sellers are pushing this market down. Support smashes with that momentum, and then it reaches these one-to-ones, and sure enough, none of the triggers are through. Because none of the triggers are through, you guys know not to trade into those one-to-ones. You're just saying to yourself, it may bounce. It might break, or it could reverse the market. I just don't know. I'm not going to trade. Well, the sellers were in control, but right here at this key area, the buyers gave it a shot. If you went short into it, you just lost. And then the sellers fought back. And then the buyers fought back. And then the sellers fought back. And then the buyers fight and the sellers fight. And guys, this is visually what these key areas can do. And this is why 90% of our day is just waiting, right? We're not going to get caught in this. All of my triggers are below resistance. All of my triggers are above support. Nothing matches. One is red, one is green, until both the small and the large get above resistance, and now it behaves as support. My small triggers are outside of my large triggers. I have odds favorable momentum, and I haven't reached a key area. Well, now my path is clear. This circle on that tail, guys, is your 10%. This is the entry that we're talking about this morning. This is the highest probability trend trade that you can have after a termination that creates a full reversal, after a strong bottom, a good bottom. And this is the trade that typically wins 70 to 80% of the time. This is the trade that loves to make it to that next key area. This is the trade that's going to set the tone for everything you do. This is the trade that's going to make you a chart reader, guys. We're going to teach you to sit on your hands and do nothing when there's nothing to do. And then through repetition and recognition, you guys are never going to miss this setup. And this is such a great visual. I'm going to give it to you in the room today of where a little patience pays dividends. And then one more termination. I'm going to ask real quick, though, is everybody okay with the concept? First and foremost, using the large chart, price reaches an area. If no triggers break that area, sit on your hands for a minute. Wait, let's see what happens. Let's err on the side of safety, guys. Can you give me a why in the room if you're a little new with me and you're feeling good about the simple recipe? Price reaches, no triggers, no trade. This is amazing. This is great for profits. This is also great for avoidance. Sometimes you're going to get, and Shaq, thank you for the why. Sometimes you're going to get a clear path and the market seemingly reverses from nowhere. And sometimes you're going to get odds favorable momentum and a clear path, and the market just goes down without hitting that fib. Thank you, T-Bird. This final termination condition that I'm going to give you guys is going to help you identify through the smaller chart change that's happening on the larger chart. And since the larger chart is slow, you're not going to see it as quickly, guys. And this last one uses your entry chart, but it uses divergence. It doesn't use areas. Doesn't use the lines. 3 divergences, 3 losses of momentum in the same price range may terminate the trend, may create a push in the opposite direction beyond the perfect entry. But 3 divergences is your giant red flag saying no more short trades, or 3 divergences from a high is your giant red flag saying no more long trades. These 3 divergences become more powerful when your small triggers work your way inside of the large triggers. That's that anything can happen trigger look, where you just don't know whether it's going to go up or down, and it becomes more powerful still when that third pivot from a low is higher than the previous, or the third pivot from a high is lower than the previous, and this creates a head and shoulders pattern where price can't even match the previous, and we're losing momentum multiple times. You're going to see this look from a low and this look from a high at times when your large chart isn't showing you that change happening quite as fast. And then you're also going to be able to use these, guys, if you take the perfect short trade or the perfect long trade, and you're in that trade in 3 divergences print, it creates a management opportunity. It eliminates a lot of the hope and allows you to be a little pragmatic in taking an exit and waiting for the next best opportunity. So rule number 1 on the large chart gave you the momentum that you needed, a market likely to push in the direction of the trade. Rule number 2 on the large chart said that there were no lines that you were trading into that can create a bounce or a reaction or indecision. So you now have the advantage of momentum, and you now have the advantage of a clear path. So we're going to turn our attention to the smaller, faster chart, guys. And we're going to do this to find our entry. So when everything on the large chart says down, 1 bar, odds favorable, haven't reached the area, triggers have cleared the previous areas, guys. The rules are met on the large chart, and those first 2 advantages are in place. I'm going to take a look at my small chart, my fast chart, and I'm going to let it now refine that one bar. It's going to create 15 to 30 bars to get me back to the best of the best spot. And rule number 3 says, I'm going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. I'm going to use a limit order to literally wait for the market, for the small crowd to push against the large crowd right to an area, fibs, mid bands, yellow 1-to-1s, and they're going to be inside of favorable large triggers, meaning that on my small chart, both my large and my synthetic, the bigger triggers on there, are going to be overlapping, one on top of the other, creating the smallest, most concise spot where the market is likely to continue. Favorable large triggers creates a huge advantage for the new user because it really consolidates your entry area where the market is likely to continue. As you grow with the software, you may find that you're willing to take trades without that best of the best look, but for the new user, this becomes imperative. So your pullback begins with a reversal bar. Everything says down on the large chart, and your small chart says, hey, let's go up. So you're going to identify your triggers from the top line to the bottom line, and it could be the synthetic on top, the large on top, but the two work together to define where you're going to look for areas. At the time of the reversal bar, you're literally going to draw a box around your triggers from the highest point of the triggers to the lowest point of the triggers. And this is going to help you define where to look for areas. Areas can be Fibonacci resistance or support, yellow 1-to-1s, or a mid-band. But the key is that they're inside of those triggers. So we've defined where we're looking for areas, and now we're going to create a window of opportunity. We're going to create the point where the market is most likely to bounce from the lowest point of resistance inside of those favorable large triggers to the highest point of resistance inside of favorable large triggers. Remember, it can be red Fibonacci resistance, magenta midband, yellow 1-to-1s, from the closest point towards price to the furthest point inside of favorable large triggers. This becomes the point where the market is most likely to continue. Because of the momentum on the large chart, because of the clear path on the large chart, you'll activate a limit order. Right-click on your chart, then activate a limit order just below that lowest point of resistance. And then you're going to put your hands up, roll 6 feet back from your monitor, and you're going to wait. You've done everything that you can do. You've identified the advantage of momentum. You've identified everything that you need to enter the market. And now you're just waiting. And if the market comes back to your limit order, you are in a short position. You're in a short position with the advantage of momentum, the advantage of a clear path, and now having entered where the market is most likely to continue. Guys, this entry becomes your first 20 days of study, because if you can recognize this best of the best, if you can identify momentum and all that clear path, and we'll go down to this one, price and triggers made it through the 1-to-1s but hadn't yet reached support, odds favorable momentum. This is just me showing you that it happens every day. There's your reversal bar. And guys, give me a Y in the room if you see that it pulled directly to resistance inside of favorable large triggers. This is a pattern that repeats itself every day, guys. This is your best of the best. This is your highest probability. Termination creates a full reversal. Full reversal gives me odds favorable. This one in particular is a medium probability trade because the smalls have smashed with momentum, but the larger above those 1-to-1s, still a beautiful trade. So, great question. So our stops, and I'm going to go through it right now. Great question, T-Bird. We're going to look at entries. I'm going to look at one more entry from the manual here, and we're going to go through all of it. Everything says up on the large chart. This is what the small chart looks like. This is where you guys are going to wait for the reversal bar. At the time of the reversal bar, I just want to show it going the other direction. From the highest point of support to the lowest point of support inside of favorable large triggers, this becomes your window of opportunity. Your limit order goes at that highest point of support because of the momentum, because of the clear path. And if the market pulls back to it, this becomes your entry. So one of the things that we're capable of doing, T-Bird, and this is pretty awesome, is we can define really without question where the market is most likely to continue, where the market is most likely to bounce. And that's exactly what these areas inside of favorable large triggers do for us. They create a bounce point. It's like throwing a tennis ball up against a brick wall. We get in at the top, the highest bounce point, because of the momentum on the large chart. There's nothing there to create a bounce. We fully expect that it can go to the bottom because it is a window, right? We're good, but we're not always to the tick good. Sometimes it is a window. And the cool thing is when you can identify, when you take a couple weeks and practice this and study this, you know exactly where the market shouldn't go outside of the window of opportunity. So typically 4 to 5 ticks beyond that lowest point of support. This is where the market shouldn't go. And if the market goes there, you have a protective stop. You're protecting your assets, keeping the powder dry, and you took a small loss. And I'm never going to tell you that you're not going to take a loss, because anything that wins 70 to 80% of the time, they're mathematically obligated to lose 20 to 30, right? And if you've traded at all, you know that losses are a normal part of a positive equity curve. You realize that this is just a cost of doing business, because we're not taking one trade, guys. We're taking 20 trades, 30 trades, 50 trades, right? And we're looking to make sure that over the course of the sample, they provide a statistical advantage. So every 10 trades that you take, you're likely to lose 2 or 3. Every 20 trades, you're likely to lose 4 to 6. You never get to pick which ones they are. But this is how we can protect ourselves a little bit. And the cool thing is this is the trade that you're going to learn how to never miss because of the advantages that are present. And this is the trade that when the rules are met, 70 to 80% of time is the result. And T-Bird, once it starts going in the direction with momentum and a clear path, you're going to reduce your risk below that reversal bar, and it's going to minimize your risk even more. So on this particular trade, my limit order was probably right around here, 56. We'll do 2 ticks below, right? Once I got the reversal bar, the risk in this trade was approximately 5 ticks, $50 on crude oil. And momentum smashed through the first target. Weakness at support sure looks like a wonderful opportunity to take profits. And this is all we do each and every day. Termination, full reversal, odds favorable, clear path. Never miss it. Get paid. And I encourage people, 20 days, learn how to enter the market at the right spot, because when you do, it creates a very manageable trade. Take a lot of pictures, and that's how we're using those tails as well. Is I can go back on my large chart, and if the rules are met and I see a tail, circle it, right? And if the rules are met and I see a tail, circle the tail. And what you're going to find on the small chart, if it lines up with resistance or support inside of favorable large triggers, congratulations, you have a high probability trend trade. And let's see what this one looked like coming off of that good bottom here in the morning. Pulls right back into support, right inside of favorable large triggers. And sure enough, termination creates the reversal, gives me the momentum. This has the potential to break because of it, even more so with the termination. Look at the picture perfect entry. So you can start using this to gauge trades. Here we don't have the perfect high odds favorable momentum look, but we do have a clear path. We have an established uptrend. So now you work your way into being able to take medium probability trades, to trade with an established trend, to get to that next area. So there's an order of operations. And every one of you knew, don't take the short. Isn't that awesome? From fib to fib, and this is where the highest probability of getting paid is. And sure enough, crude oil put on a little bit of a clinic for us. And then the S&P has been railing, hasn't it? And it started directly from a termination condition. And then there's a little odds favorable, and we haven't reached the next area. Let's see what that circle looks like. That was at 848 this morning. I'll be damned, it pulled right back to support inside of favorable large triggers. And off it ran. So once again, guys, here's the exact same pattern on a different market. And as we back up a little bit, that termination, oh, this is the NASDAQ. Pulled you right back inside of favorable, not quite favorable, a little bit split there. NASDAQ is a little bit of a different animal. But the rules stand true, guys. When you have those advantages in place, we're just going to look for an entry. That one was right at the very bottom of the window. You would have had to ride it out just a little bit. And then off it goes to the races. And once again, it started at a termination condition. So guys, I want you to go back and study. I want you to go back and look. With odds favorable, that one pulled right back to support. The S&P is a little wonky right now, right? They're trying to work things out. Definitely an opportunity there. And you're going to use these tails to study, guys. I want you to use these tails to take a little time this afternoon and tell yourself, Novak's full of beans. Where's my picture? There's no way. He handpicked that. I didn't, obviously. It's a live market. But you can go back and circle these tails, guys, and you can go back and see if they fit the rules. Back test it on crude. Back test it on the S&P. Go back on gold, soybeans, silver. I don't care what you go back. I teach patterns, not markets. It's important that you guys understand that. But this is how you can go back and take pictures. This is how you can create recognition through repetition. That's just weird. Keep it simple. Keep it focused. And then I'm going to give you a couple things to help you keep it simple and focused. And it's going to begin with a high probability trend trade checklist, guys. And I share this every day. And there's always people resistant, and that's totally cool. But I've never had anybody use this checklist to the letter and not do 70% or better. Is the market coming from a good top or bottom? Is it coming from an area that's created a reversal? I'm going to give you the YouTube link right here that's in the checklist as well. This is my brother talking about tops and bottoms for 45 minutes. This is one of the most informative videos. I watch it about once every other week just to remind myself the importance of termination conditions and clear paths. Do I have odds favorable triggers? No terminations, area inside. Guys, if you can mark yes to each and every one of these, you're looking at a trade that typically wins 70 to 80% of the time. You can also use this to go back and police your study, right? The same picture that we took, we could have put this checklist up against it and make sure that we're following rules, that we're giving ourselves that statistical advantage. For those of you that are visual, here's the exact same. You'll recognize this picture from the study materials. What is a good top or bottom? Well, it's a termination that creates a full reversal. Here's your momentum in an uptrend and a downtrend. And here's your loss of momentum, reminding you that anything can happen visually. You want to burn these into your brain. You want to associate the words with the looks. Here's your termination conditions. No triggers, no clear path. Sit on your hands. Small smashing through. Has the potential to break, but it's not clear. Small and large break. The path is clear. There's your entry. And then here's your window of opportunity, guys, because great entries create manageable trades. I would study this when you wake up tomorrow morning. Look at these things. Know exactly what you're looking for. And then finally, I'm going to give you a plan, guys. And this is the KISS plan. This is the Keep It Simple Sunshine plan. This is designed to optimize your chances of success with that high probability trend trade and with that 150-50 trade. This is a stepping stone in your learning journey, guys. And I'm telling you right now, once you can read your charts, once you get comfortable with reading your indicators, identifying advantages, every time you look at a chart, you should resort back to advantages. You should verbally talk about your momentum, your clear path, and your entry area. Because once you can do that, whoops, I accidentally closed it out. you're going to create a plan that fits your needs. You're going to create a plan that works with what you see, with what you recognize, with what becomes easy to you. And it's all going to be based on your experience reading the indicators. That comes through simulation, through study. Class feedback is underlined in continuous practice. Oh, all right, T-Bird, have a great day, man. I'll see you tomorrow morning. If you have any questions, please let me know. My email works as well. I know not everybody has all the time that they need, but there's my email. If you're like, dude, I just need a little clarity on this, feel free to send me a message. I'll reply. Guys, the simple plan for consistency: don't fight large chart direction. Don't fight those triggers. There's no reason. That's what we call the path to financial suicide. Define your entry. Take 20 days so that you can get in at the best of the best spot. Use the checklist. Police yourself. Write them on the chart. Make sure that you can say exactly what the market is doing and identify the advantages. And then, of course, once you get advantages, right, once you enter the trade, great entries create manageable trades. So the same way you're very pragmatic and mechanical as a brand new user, as you get into the market, you're welcome, T-Bird. I just want to make a pink ladies joke. It's total grease. I don't know if that's it or you're into cars. It's one or the other. I'm going to call you Kaniki. Super simple management revolves on getting into the market where it's most likely to continue. Super simple management revolves on getting into the area inside of favorable large triggers. Guys, this is the most likely point of continue. So because we can identify where it's likely to continue, we can also identify where it shouldn't go. That's where your initial stop goes, guys. 4 or 5 ticks outside of that window of opportunity. If the market gets to it, you're out. That's it. Done. You no longer have that advantage. But more often than not, with the high probability trend trade, the market's going to bless you with one of those reversal bars in the direction of your trade. At which point, you'll simply move your stop 2 ticks above it, below it if it's a long, and you're going to sit on your hands once again, and you're going to say to yourself, I have the advantage of momentum. I have the advantage of a clear path. I've entered where it's most likely to continue. The market's going to have to come get me. I'm not going to sacrifice myself and throw myself on the altar by moving my stop too soon. Once things are going your direction, you're either going to get hit in the stop. That's okay, normal part of it. Or it's going to hit your first target, guys. And your first target is only $100, and it's designed to create confidence. It gets the serotonin flowing. It makes you feel good. Ninja Trader's going to tell you that your target was hit. Your palms are going to stop sweating. Your stomach's going to stop turning. All that adrenaline's going to subside, and you're going to move your stop to break even. So not only do you get paid, but you also have no risk. And this is designed not because this is your best stop placement. This is designed because it's going to allow you to sit on your hands and remember that the large chart led the way, that the large chart said get into the market, that the large chart had momentum and nothing in the way. And it's going to make it easier for you to hold for that second target. And the second target's only $200 in the distance. And guys, I'm going to tell you right now, your ability to read your indicators is going to change your management plan rapidly because there's so many opportunities for such bigger moves. But as a brand new user, if you take the absolute best of the best and you capitalize on it conservatively, $300 is very real, right? And if you do that once a day, that's a $1,500 week and a $6,000 month and a $72,000 year. And guys, that doesn't suck. $72,000 a year is pretty easy. If you start using these prop firms and these trade copiers, that's $72,000 a year on the exact same one trade, $300 on 10 linked accounts becomes $720,000 a year, which isn't bad. You can supersize with 720. And there's people that do it on 20 accounts, which means their $300 trade becomes a $6,000 trade, guys. And it's not unlikely. And it's not uncommon for people to show a trade where they made $500, but in reality it was a $10,000 trade because of trade copiers, because of these prop firms. These are things that you can do. But the idea is that you take the right trade. The idea is that you present in class. When you have odds favorable momentum, this area has the potential to break, but isn't guaranteed to break. No divergence, everything says up. And look at Alex's entry. 100% beautiful. He takes quick profits because he knows that this area only has the potential to break. It doesn't, in fact, have a clear path. So he takes quick profits on one and gets to break even on the second. And guys, this is one of those $100 trades that add up. All it takes is 3 of those to get you in the same spot. Alex, absolutely beautiful trade. Termination creates the reversal. Reversal gives the momentum. The perfect entry. Outstanding management. In at 63, out at 64, out at 73. It's $110 in a matter of seconds. Beautiful. And that's what we teach guys every day. Every day. And that's what this KISS plan does for you. The KISS plan gives you the opportunity to take that highest probability trend trade, to be able to manage it, and then eventually get into that 50-50 trade. And Alex nailed it. He had odds favorable momentum. He had strong triggers on the small chart. He had no divergence on the small chart. He was coming from a termination, and he got in at the area. And then since it says if divergence prints exit trade, guys, I could literally teach a class on those 50-50 medium probability trades with Alex's trade. He gave himself the best chance of success. And while it wasn't a home run, it was still money in his pocket. So thank you for posting that. That was very timely. And guys, that's our first hour. This is what we do. We talk about advantages. We talk about recognizing advantages on the chart. Base hits pay bills, Ron. Absolutely. There's your KISS plan right there. My hope for you is that you take this KISS plan and you make it yours. That you take this KISS plan and maybe you adjust it to what works for you. And I want to show you a little something about how simple a trading plan can be. I'm going to get rid of the fluff. And that's 2/3 of a piece of paper, double spaced, guys. And if I do like regular spacing, it's a half page long, 2 trades, highest probability of success, and it's only a half a page long, guys. It defines your entry. It defines your management on 2 separate trades. And if you just stay focused, you can do it. Price reaches yellow 1-to-1s. Absolutely no trigger lines break through, guys. Even with the momentum, I don't have a clear path. And look how the market has banged its head on there. This is its 3rd head bang. Do you want to get caught up in the indecision? And if I circle this 1 bar, whoops, you can see how, I'm having troubles with it. Caught in between fibs is exactly what it looks like. There's that indecision for you guys. And then if we go back to crude oil, the area is not clear. The path is not clear. I agree, Ron. Perfect trades don't always work out, right? But your ability to read charts allows you to manage it. And sure enough, you're good. So guys, this is what we talk about. First hour. Good morning, Jose. Talk about the best of the best. Guys, learn how to recognize these advantages, then build a plan that suits your needs. The second hour is going to be spent looking at the trades that you guys posted. It's going to be spent looking at your charts. It's going to be spent looking at the live market, talking about what we see. Sergio, do you have a specific question that I can help you with? And then I'll also give you the path to it. This is your software user guide. This is where most of your questions can get answered. But if you need help with scaling, with closing, anything like that, I'm happy to help in the room. Guys, that's what this room is for. It's not just about the patterns. Ask anything and everything, anything that you need from Nexgen. I want you to feel comfortable asking. If I don't have the answer, I know people that do. And if I can't give you the answer, I can get you in the direction of the person that has it. Some of the most common mistakes. Crude came up on one chart and all your workspaces are 21. So what probably happened, Sergio, is when you closed, you probably red X'd. And when you red X the charts out rather than closing the workspace, cool. So easy fix. Let me show you right here how to close. What you want to do, and this is probably one of the most common things. So I knew right where to go and knew exactly what you did because I've seen it 100 times. Where is it? Closing Ninja Workspaces. So what you're going to do when it's time to close is you're going to go to Workspaces, and you're just going to hit the close button on the list from whichever one's open, and it's going to ask you if you want to save it. And if you want to save it, just click yes, and you'll be great. But if you accidentally close out a chart, maybe, click no, and it'll default back to when it opened. So that's your picture on how to close out. But let me show you how to fix it real quick so that you can get back to brand new. This is the easiest way. Is go ahead and go to the resources page, and I'll give you the link to it, so all you have to do is follow it. And from the resources page, just rerun your indicator, Sergio. Go to download the indicators, and it's just going to reinstall fresh workspaces, fresh templates for you, which means that you're gonna be able to knock it out brand new. You may have to reposition them on your chart a little bit. And then once you download it, it's going to give you those fresh workspaces. You'll be solid to go. John's got everything updated to the right contracts. And then you're set, you're fresh, you're good to go. And then that little closing will get you where you need to be. And then, of course, guys, if you have a tech question that I can't answer, and it happens sometimes, I'm going to tell you, Jason and Tech, there's nothing Jason can't fix unless it's just not broken. So I'm copying the link right now in Tech. So if you ever find yourself with a challenge, throw it over there. But always ask in the room first, because I've broken everything that can be broken, I think. How do we feel about price reaching support and not one trigger line broke through? Go get a cheeseburger, Ron. So there's some medium impact news or some small impact news coming through right now. You want to see if it affects the NASDAQ? If you took the long up to the area, you probably got paid at that red line. And once again, let's circle the tail, guys, just for grins. Small and large above the areas, odds favorable. There's a pullback to support inside. 5 ticks outside keeps you in the trade, and sure enough, off it goes to Fibonacci resistance. I do love it when that happens. And then the S&P broke as well with news coming out right now. So with news coming out, I'm going to leave you guys with the S&P. I'm going to go take 5 minutes and stretch my legs real quick, refill my water. When I come back, we're going to focus on everybody's charts, guys. And I'm telling you right now, I don't judge you on your charts. I don't judge you on your trades. I don't judge you on whether or not the rules are met. What I will talk about is advantages. I'll talk about the advantage of momentum, of a clear path. I'll talk about the advantage of an entry area. And my goal every day is to take what you see and help you translate it into a more profitable, a more consistent, a more advantageous look. So I'm going to take 5 minutes. When I come back, we're going to start looking at your charts. We're going to keep bouncing back to the live market and seeing what it's telling us in the moment. If you have a question, please post it in the room. If you need help with something, post it in the room. If you have a picture. Guys, one of the cool things that you can do is, I don't care if it's a trade or just a picture. Take a picture of what you see. Draw an arrow. And just say something clever like, hey, Mark, is this a term? Because I'm not sure. And guys, what that does is it opens up discussion for us to go back and talk about termination conditions. So I'll be back in 5 minutes, and then we will head into that second hour, guys. Go get a Pop-Tart. All right, and we're back, guys. Let's get into that second hour. I see a lot of names in here that I haven't seen in a while. If you are back looking to rebuild a foundation or something, or you're back just maybe you have the week off for the holidays, say hey, ask a question, whatever you need. I won't call anybody out, but I do see some names I haven't seen in a while. It's nice to see you guys. Holler if you need help. That's what I'm here for. So I'm going to scroll up to the top of the room, and we're going to start looking at some of the things that are going on. We're going to look at some of the advantages, some of the disadvantages. We're going to start with Ron. And Ron is a huge fan of the idea that momentum leads the way. He's been with us a little over a year now, and I can tell you that everything he does stems from chart reading. And it stems with breaking areas and getting in. And yeah, this is a little out of sorts for you, Ron. Gave up clear trouble on large chart due to the strength on the small chart. A little risky. But because of all of the strength getting up here, you're able to take a quick little bite, make a quick little money. And I think that's rad. Nice job. Gary posting up, reminding us about the news. Thank you for that, Gary. And then let's see what you did. Kind of a weak bottom. Right? This is one of those 50-50 looks, and that's all right, Dwight. We all talked about you a lot before you got here, and then we chose not to talk about you more. Hey, Jeremy. This is one of those 50-50 trades, guys. This is one of those trades where things have the potential to break, but they never broke. And divergences on the small chart gave you that one. And Gary, I see you got chewed up a little bit into it. And then you said, wait a minute, with these divergences, I need to be looking the other direction. And sure enough, that's exactly what it did. When 50-50s don't break, guys, a lot of times they give you that apology trade. And on 7, Gary, do you notice that you were right on a fib? I think that was the fib update that showed up. So you take it the other direction, the correct direction. Nice job. When those 50-50s don't work, there's a lot of opportunity to go the other way. Once you grow with the software a little bit, learn how to catch it. And then there it is, off that good bottom, sure enough. Off to the races. Got absolutely no risk heading into your first trouble spot, and then you've got a big old target right there on the other one. It's okay. You add it on. That's no worries. Get in, get paid. Gary, the only thing, and guys, this is one of the things that we're going to work on together as you grow with the software. Entries are awesome. Entries are amazing. Entries are so important in what we do because great entries create manageable trades. One of the things that you're going to run into is you're going to have to make a decision. So we're going to have a quick management talk if you guys are okay with this. Remember that the large chart was cranking up, guys. And the large chart, everything was good to the upside for Gary on this one. One of the common mistakes, and Gary, I like your trade, man. I think that termination, you get the smalls above, everything rolls, you're heading in. You know this market's going up because terminations are amazing, or at least you know you have an advantage to do it. So one of the challenges that I see, guys, hey, Michael, good to see you, man, is everything says up, right? And now at this point, the large chart has odds favorable. The large chart probably has a clear path. So we're forced into a decision. If this market pulls back, where's it going to pull back to? Probably support inside of favorable large triggers, right? So there's two ways to handle this. One of them is you just exit, right? You're like, I'm just going to jump ship, predetermined, make some money, whatever. The other thing is you've got to put your stop where the market shouldn't go. Does everybody remember that lesson from entries? Which means that you pretty much have a break-even stop. And one of the things that happens when you hold for larger moves is you're gonna have to suffer retracements on a smaller, faster chart. It's a fact of life. So I want to look at the NASDAQ and what happened. Kind of go back and let's look at use that chart. That's crude oil. Here we go. It was actually back here, I think. Man, this market moves a lot, doesn't it? At 8:43. But I think if you kind of piece it together, it helps a little bit. And we circled that one too. So Gary, your long was beautiful, right? I had some one-to-ones that you didn't. And this is where you have to make a decision. The path is clear. We haven't reached any trouble at all. When the pullback happens, are you going to jump ship? Or are you going to add on, right? And you have to be willing to suffer this, but I want you to see something. This tiny little move back to the best entry, nothing changed on the large chart at all. And this is one of the things where the small chart will get you, is absolutely nothing changed on the large chart. Absolutely nothing suggested we weren't going up. Nothing said that the market was likely to retrace. Nothing said that the strength and triggers and direction weren't going to win. And I think what you find here is it becomes easier to hold on for that next great target if you remember to let the large chart lead the way. If you remember that it's all this momentum. Look at where you put your stop. And if your stop is right where you would enter the market for a high probability trend trade, well, then you've got to move your stop, right? Don't put your stop where the market should go. Gary, beautiful trading, awesome management lesson, hopefully for everybody in that one. And then, of course, Gary had the wherewithal. He's like, whoa, that wasn't an exit. That's an entry. And jumped back in and took advantage. So rock star trading, Gary. And then let's see what's next. Whoop, that's the same one. Good stuff. So I'm going to scroll down. We're going to take a look. Cav. Let's see what Cav did. Cav says, I'm going to make some money on the way up. And then when that termination, creates a full reversal, gives him odds favorable. Look at this. His scissors are wide open. I love that. You take the perfect entry and get paid. Cav, outstanding trading. And then Alex, exactly the same. Beautiful trading, gentlemen. And if you're brand new with us, isn't it pretty cool? Cav, who I'm pretty sure isn't talking to Alex via Skype, and they take the exact same trade with the exact same advantages coming from the exact same place because they knew through study that that's the one that they should never miss. Guys, beautiful trading. And then Ron, termination, full reversal, odds favorable, and you take a little chunk. I love Ron's plan. It revolves around momentum, guys. When momentum leads the way, things get easier. And then Alex, I think we saw this one, your perfect 50-50 going the other way. That's not a bad morning, right? Get in, make money, get in, make money, break even. Beautiful. Joel, let's see what you did. You posted, termination creates the reversal, termination to the reversal, and then one divergence, two divergence. Ultimately, it broke, and you made the decision to not hope. That's a tough decision to make some days, guys. And then Phil. All the momentum, trend trade long, 13-2, triggers very strong above, widening, large triggers, willing to go with strong momentum. Guys, this is experience. It reached one-to-ones. And Phil, I hope you don't mind me talking about this. Loss of momentum, a higher divergence on a large chart is a pretty good indication. This is the best momentum look ever, guys. This is the one. Look at the gap between the two. And we know that it hit the one-to-ones. And Phil says, you know what? With this much momentum, momentum leads the way. Strong triggers break things. And with this perfect entry at support, right inside of favorable large triggers, he's like, hell yeah, I'll take a shot at this one. Look at my large chart. and you take it all the way to Fibonacci resistance. And Phil, this is where you're going. When you begin to trust momentum, this is where you're headed. When you begin to recognize entries, this is where you're off to. This is outstanding. And this is a hard trade to take initially, but because of all of the change that happened down here, because the area broke, because it's pulling right back to support that used to be resistance with this much momentum, Phil says, wild horses couldn't keep me out of this trade. And he gets paid. Beautiful. Ron, good luck. I like it. I've been on that road. Got lost. Then Bobby, let's see what you're doing. Bobby says the same thing. Bobby says, I do love momentum. And I love your momentum style trade here. Odds favorable, everything cranking, and you let it break your one-to-ones and pull right back to support, right? Break, pull back, giddy up. That's solid, Bobby. Notice that he's trading from a termination that creates a full reversal. He's trading with outstanding momentum. The area is broken, and he pulls back to it and off to the next key area. Bobby, you could build a career on that one. All right, Carl. Good to see you in here, man. So let's see. Termination. Strong triggers, wait. Both triggers to turn. There's your termination. 1, 2, 3 divergences in the same location. There's your high volume area trade. Didn't quite get you. That's okay. And then with everything down, you take the perfect entry right at the midband and take it all the way down to the fib. Carl, beautiful trading. And then you missed the second one that followed. That's okay. The second one was the easiest one. And then here we have that 50-50 trade, right? Because of the 50-50, should I have exited on the 5-1 divergence and not held so long? For me personally, Carl, are you with me? I know you're back after a little time, and I know that you're looking at the range chart too. So let me share everything that I have in my arsenal, if you don't mind. And I'm going to go back to just for you guys coming back to it, right? For you guys that are coming back to it and trying to get consistent again and really focus, I'm going to show you. And this is kind of the 50-50 trade checklist that I've got. So I'm going to drop it right here. I'm going to put it over your range chart. I'm trying to, no, we'll put it, there we go, because we can still see the large. Odds favorable on the large chart was an absolute, right? Smalls outside of the large on the small chart was an absolute. No divergence, beautiful trade. From a good top or bottom, absolutely. You had everything here, Carl, and you took the best entry that you could have taken, without a doubt. Notice it, and this is the simple one, guys. This is the simple one. Divergence, no trade, and this is kind of a big deal. So you get in at the right spot. Everything's great. Your risk is minimal, right? Below the reversal bar. And then when this divergence prints, from the KISS plan, it just says, let's jump ship, right? It's not broken. We're losing momentum, especially your smalls are inside of your large as well at this point. It's really giving an indication that this area may not just smash. And then things that you'll notice on your range chart, and I don't know how comfortable you are with your range chart, you've got divergence from an outer band. That's a big deal to me. And then a breakout bar, a white bar coming after it, that's a big deal too. And a lot of times this look means a deeper push before it heads off in the direction. And that's just a little market flow chart. But without the market flow chart, if you were just keeping that really simple plan, divergence is an outstanding exit condition. Great picture, Carl. And I hope that helps you a little bit. Yeah, and I think that if you're not super comfortable with something like this, keeping it like the ultimate simple at first, I think the market flow chart becomes a little confusing. But once you know exactly, and you don't have to second guess these conditions, it becomes easy to add that market flow chart into it. And then this is you again, Carl. I like it. Odds favorable, 50-50. And you took it. I see an entry. Did you exit? From nowhere, second higher divergence, odds favorable, rock star entry. Where'd you get paid? Or are you still in it? Because that fib's a hell of a target. Oh, okay. It looks like there was an entry there. Oh, you drew that on there. Okay. I was like, gosh, that's perfect. So if you were going to take it, Carl, perfect, right? And that's exactly what Phil did. He said because of the second higher divergence, because of the momentum, even with the little challenge here, he had enough advantages there that he was very comfortable taking it. And that's one of those things where you'll get there. If you don't take it, no worries. And if you do take it, fantastic. And then Jeremy, nice to have you trading in here. There's that termination, creates the reversal. And this is that, look at the distance to the large triggers. I love that. Everything breaks above. Pulls right back. This is a continuation to get up to the trouble spot. And you got out quick. Quick little snippet. You took profits early because of the antenna bar down on the 8 range. You entered after the antenna bar on the perfect entry, Jeremy. That's a great place maybe to get break even. As you come back up into that HVA line. But your large chart, you had some awesome manageable risk there. Great trade. And then if you felt like getting back in, once the small break above, there's your little boom, boom. But there's just no areas really to hit there. It's a nice trade. This is cool. This is showing great patience. Letting it get above the large, right? You did enter after. Did you take that one? At that point, everything says go. But this is perfect. That's great patience, not getting chewed up in here, letting things really get to your side, and then rocking it out. Nicely done, man. And we got through pictures pretty quick, guys. Let's go see what the market's doing. Well, it went down. I wonder if my NASDAQ traders had an opportunity here. Maybe not. 3 divergences, but if you let it roll, there's a great opportunity right after it. Notice how the momentum pushes it up, then the weak triggers, and then it starts its run down. NASDAQ's a little different animal. Little bit of overrun, but 3 divergences confirm that it is overrun. Now we're pushing down on the ES. All my triggers are above 1-to-1s. I got to sit tight for a second, see what it's going to do. And then there's that crude oil. Termination, full reversal, 50-50 on the divergence high. Look at that perfect right to the mid-band. If you were going to take it, you could have been in at 76, out with $100 at 86, and break even maybe out of that one now. Because it is a 50-50. We haven't broken the area yet. Smalls are through, large or not. Have to make a decision. Is that your trade? And it may be eventually. But it's terminations, guys. Terminations create reversals. I'm going to take everything off of this chart real quick. I wish I had a bigger monitor so we could stretch it out more. My biggest challenge, full disclosure, was I would go long into this area as a brand new user. I hadn't developed the trust that when price reaches an area and no triggers break, It's okay for the party to be over. Let's just see today how many times, whoops, you ever accidentally click something and just paint your screen? So there's 3 that stopped it cold. That's 4, 5, 6. Mid-band large sugar's a full bar away. There's 7. 8 above it, 9 below it. Look at that. 3 divergences in the same location pushes it down. Guys, there's like 10 instances of the market stopping at termination conditions. This is a great little test, or a great, at least visual, to give you an idea of the power of those fibs. And then, of course, if you took the pullback to support with 1 divergence, you just got paid up to there. And this is on the KISS plan. Divergence says no. As you grow with a plan, and guys, trust me on this one, as you grow with the plan, this look is going to make you take this one every time. This great termination that creates a full reversal is going to have you ignoring a single divergence. That's just a growth process. It's one of the things that happens over time. Crude oil's putting on a clinic. Now I have weaker triggers, righted areas, loss of momentum, right? How many advantages are we willing to give away? You are learning, Joel. It's a process. It's a process. It's okay. You took it. You got paid break even. This is beautiful. That's everything we said, right? A lot of you will take it. You'll manage it. You'll get out break even. And eventually, Joel, you'll hold it because of the large chart. That's rock star, man. So it's not that you will learn. It's that you are learning. Carl, 50-50 from a great bottom. Perfect entry. You took it on the second stab and get paid. I am learned. Yes. Whatever you do today, do it with confidence. Ron, you're killing me with the pictures today. I love it. Guys, the easiest way to get good at this, is repetition. Absolutely. Did I GWC? I'm sorry. Not intentionally. All right. So that's your 13-2, termination, triggers roll, odds favorable. You take the jump in and get stopped out, right? And then you take the pull back here. I'm not sure what's going on with your triggers. Where's your 5-1? This is your 5-1. Your triggers are really weird on your 5-1 GWC. Is that intentional? So look at your triggers. And look at these guys' triggers at the same spot. Something's not right. So your template. So go to your 5-1 for me, right click and go to templates and load it and look for that 13-2 Rinko. Or that, I'm sorry. It's your 5-1. So we're looking for the 5-1 Rinko 2023. Load that up for me and see if that changes your trigger look. Because I think it would have helped you tremendously in that trade. Because you would have had favorable large triggers down here. And you probably would have felt compelled to skip this one here and waited for the pullback right to them. Let me know if that works for you. If not, we may need to do a little reset on your database, which isn't hard to do. But you see how this looks? I love your entry right at the mid band, and we know that it went, which is outstanding. The momentum trade GWC, let's address that real quick. These trades work amazing when the path is clear. We are crude oil 124. You're right. You're on the right. You're on the right contract there. You just need the template that says 5-1 Rinko 2023, I believe. Let me double check my NinjaTrader 8 ones real quick. And I'll make sure that you have the right one. There's a zip file with it just to make sure that you have the right one. Jerry, I'm not 100% sure. I guess it depends on the feedback and participation on the first couple ones. He's testing it. I hope he is, because I've been his guinea pig on the questions that people are, and I'm telling you right now, I have fallen in love with everything that he's doing. I am floored. So GWC, there's a zip file with it. And I did so much study this weekend. Had a blast. Want you guys to see, this is my weekend. Don't mind the tattoo pictures. All of these pictures down to like the 18th. This is all my weekend coming through over and over and over, taking a million pictures. It's been fun, guys. I've been super student. Smalls haven't broken through resistance. I'm hoping that he does, Jerry. For those of you that don't know, I fight my brother on everything. I'm so comfortable with high probability trend trades. I'm so comfortable with simplicity. I'm so comfortable with the highest chance of success trades that my brain has trouble steering outside of it. And I'm going to tell you right now, I have embraced 100% the role of student again, and my eyes have been opened to the advantages that are available. And it's pretty cool. Guys, notice how 1-to-1's every trigger line's above it. Resistance, every trigger line's below it. Which way is it going to go? Does anybody know? There's only one answer. You have no idea. You're not in control of the market. And GWC, that is so much better. Oh my gosh, that's so much better, isn't it? Now you can find that area, and you're still missing a trigger. You're still missing your synthetic triggers. So you're closer. Where's my crude oil? Was that crude oil? That is crude oil, 124. 124. All right, I'm going to open up my NinjaTrader 8 real quick. I want you to do something for me, GWC. And I think that Something's afoot with what you have going on. Um, I want you to try something for me if you don't mind. You're going to need to disconnect. So you're going to have to go to your connections and disconnect real quick. And then go to Tools and Database Management. Nope, that's not it. Hold on. Tools, Options, sorry. Market Data. And I want you to... Where'd it go? Maybe you do have to be connected. Let me connect again. I think it's NinjaTrader 7. So we're going to go Tools, Options, Market Data. Where the heck did it go? There we go. I'm sorry. Database Management. I apologize. Tools, Database Management. Reset Database. Oh, okay, you do have to disconnect. Sorry. So we're going to disconnect. And once you disconnect, we're going to go Tools, Database Management, Reset Database. And you're going to say yes. And we'll have to restart it to get it going again, which means it's going to take a little bit out of there, right? And then you're going to repair. Okay. Close it down. And then shut your NinjaTrader and open it back up. And what that's going to do is it's going to go in. It's going to help fix any glitches. Something's weird with yours that it's not working. Do you go through in the mornings? Go back to the software guide. Do you go through and delete your cache and tick and all that good stuff in the morning? Yeah. I would try the rebuild then. Something's weird. Something's odd. And I'm not sure what it is. Because you should have synthetic triggers somewhere up here. See how my synthetics are up here? My large are up here too. So I'm not sure why you're getting such an aggressive trigger look on yours. How many days back are you? Like if you right click on your chart, sorry, this is me going through what I know how to go through. But you may want to, have you been with Jason lately? Just have him take a look. Because something's odd, something's off, and I'm pretty good with dissecting challenges, but yours kind of has me stumped. So if you do the database thing and it works, let me know. Sometimes that fixes issues. And then on that NASDAQ, bad bottom, enter trade with the area inside a large. All right, Joel, I like your entry. It's beautiful. I think that the biggest problem here is you had, and let me show you, and Joel, I think this will help you because you're so good at reading your charts. Bad bottom, right? Especially coming from a good top. Everything is down to a bad bottom. But when it pulls back up to the mid-band, you have 1, 2, 3, 4, 5 areas that haven't yet broken. And I think you missed this one in the moment. Did you see that huge gap back to your large triggers? That's where you entered, right? Gap theory, right at the large triggers. I like that. I mean, that's a solid one. But when this divergence prints with all of these areas not broken, that's party over, brother, at least for a little bit, right? You took a great shot at 52. Beautiful entry. I don't think, especially after this reversal bar, just not leaving that much risk on it. I think it's also hard when you start catching these great entries the way you caught it. It's hard to believe that it couldn't win, right? It's hard to believe that you should exit a trade where you entered it so beautifully. And then it pulls back. Large triggers don't blink. It's pushing, just trying to get through. Yeah. Bad top. Smalls got through. Large tried to. Pushes all the way back. 1-to-1s. In this little moment, just waiting. What's going to happen? Is all this resistance going to hold? Is it going to break? Are these 1-to-1s better than this? I don't know. Can you guys sit on your hands and wait and see, wait for your charts to agree? Wait for your small triggers to roll? Wait for something to give you an indication that one side's winning? Decisions are being made. Amen, Phil. That's it. They're just being made. The sellers love this area, right? And they pushed it down right to the mid-band. Large triggers don't follow. I'm telling you, once I worded it like that, for me, Phil, that when I say things in class, it's because that was my aha moment. When I realized that this is where the people that control the market are trying to figure it out. So one of two things are going to happen here. Either the sellers are going to unload on the retest because they're done. They're not willing to let the buyers go anymore. Or the buyers are going to say, well, we just really want to continue that trend that we started. And if that happens, over here, my smalls are going to get above the area, right? That's going to be the first indication. Is my small triggers on my small chart are going to start breaking above stuff like they are. My large triggers are going to start to roll over here. My small triggers are going to start to roll over here. But until I really get some sort of confirmation that 45.41 or 45.40, 45.41, let it tell you that it wants to break, right? Get a little more confirmation. Does that make sense, everybody? Am I the only one that hates to sit still? Not being in a trade, it aggravates me some days. Some days I couldn't care less. But some days I just want to be in that trade, right? And this is where I get in trouble. Because this is where I hate being honest with you guys, but it's probably good. This is where I say, oh, that was overrun, 3 divergences, right? I'm going to try that no divergence midband thing that I see people doing. And then I lose. And I say, oh, I got a reversal bar. I'm going to jump in right here. And then I lose again. And I'm like, well, I'll just take that close on the other side because, I mean, it's red. And I lose again. And then I used to take this one. Man, look at those weak triggers at resistance. That's got to be the one that works, right? But by the time I get there, I'm down $1,000. So then I start making bad decisions, hoping areas break so I can get my $1,000 back. Does that sound like anything anybody's ever done other than me, Michael? Doing it, right? So check this out. Guys, and let me show you the safeguard that we all have to work through. And it's right there for us. It really is. It's right there for us if we choose to accept it. My background is red, so I'm thinking about short trades. Is everybody, we're all on the same page, right? And then I say something clever like, well, my small triggers are below my large triggers. So now I have momentum. So now I'm going to say rule number 1 is met because my large were trying to turn. Everybody else so far, so we're looking for down, and we might even bend it a little bit and go, rule number 1 is met. Is there anybody in this room that didn't see price reach these 1-to-1s with all the triggers above? Rule number 2 says don't do it, right? Rule number 2 says don't. The gap theory, that mid-band being hit and the large triggers all the way up here, say it's financial suicide to give anything a try all the way up till it closes the gap. So why is it? I hope, right? That's all it is. Because we know it's not rules-based. We know it's not a statistical advantage. And here's the true story, guys, is if the market's really going to go down, this is a great spot for it to go down. But gap theory says don't try anything until you get back to the spot. And then when we get back to the spot, well, I'll be damned, everything's green, right? My smalls are green, my large are green, my large are green, my synthetics are green, my smalls are up. This is where some of you will say, it's likely going to that fib. Give me a little snapback. Give me just a little something to try and get up to that area now that all of these areas have agreed. Hope is expensive. And I think that this is one of the most normal things in the world for new users is, but Mark, the fib is red. That's no guarantees it's going down. But Mark, my triggers are red. That's no guarantees that it's going down. The only thing that you will ever be in control of is whether or not the rules are met, whether or not the advantages are present, and whether they are the rules that I present, the high probability trend trade or the medium probability trend trade, or whether they are the rules that you create through your study, through your practice, right? And I'm not saying that there's an opportunity for you guys between here and here. Maybe there is, maybe there isn't. That depends on your plan. But if you can say, I don't have enough advantages to try and go short in this range right here, how much money would it save you? And I say this, and I'm really starting to embrace this idea that being successful as a day trader isn't necessarily how much you make on the right trades. It's how much you don't give away on the wrong trades. Jesse Livermore on the importance of waiting. Men who can be both right and sit tight are uncommon. Found it on one of the hardest things to learn. There's the only after the stock operator has firmly grasped this that he can make big money. This is why so many men in Wall Street who are not at all in the sucker class, not even in the 3rd grade, nevertheless lose money. The market does not beat them. They beat themselves because they have brains they cannot sit tight. Amen. Guys, my ego is bigger than the car that I drive. I'll tell you right now. And when I'm right, it feels good. So I take stupid chances every now and then to prove just how smart I am, when doing absolutely nothing would really make that case better. And then, Joel, you could have waited on the momentum, right? Came back, lost some momentum. Second loss of momentum. It's still in the range, though, isn't it, Joel? Can we cover that? All right, Joel, talk to me real quick. Let's go through it together. It's a great lesson. That termination created the reversal, right? I like that. Can we call that a good bottom? Joel, do you notice how you're not annotating your rules anymore? Smalls are above the large are wide, everything's going up. Can we call it OFM? That's the very beginning of it, isn't it? All of my trigger lines are above trouble, and they haven't reached trouble. Couldn't we say that's a clear path? Do you see what I'm doing here? Let's define our window of opportunity from the highest point of support to the lowest point of support inside of favorable large triggers. There's my window. So Joel, if you were going to take this trade, doesn't your stop belong outside of the window of opportunity? Or I guess you could put it behind the reversal bar. So this is more of a management thing. If all the rules are met, let me rephrase that. If all the rules are met, doesn't this window of opportunity still hold true? So even if you got out underneath the reversal bar, it could create a second opportunity because the rules are still met. And let's go back to NASDAQ and let's see if it did that. And sure enough, it did. It stayed right inside of that window, didn't it? Because the large chart leads the way. Isn't that amazing? And then that one fits the bill as well. This is hard, guys. It's hard to stay in a trade, but look at this. It's beautiful. So if you did get stopped out on the reversal bar, there's still opportunity to get up there. And these are the ones where you'll learn to leave a little more risk on it, or you'll learn to re-enter, maybe on the correct side, or maybe when everything is green, pounding up, and then off it goes. It's a great look, Joel. You did a great job with it, and you followed your plan 100%. That's just the, hey, let's look at maybe the opportunity to do it a little better next time. And here everything says up, odds favorable, clear path. I wonder if it's going to bounce from support inside of favorable large triggers. And I think that annotation is key, especially as you grow through. And Joel, your entries need no annotation, right? You know exactly what you're looking for and you're good at it and you can read it beautifully. But I think that if you keep talking about the advantages, and look at this, odds favorable, HVA, above support, everything up. Even this is everything is sold to the upside. There's got to be a point in your trading, everybody, myself included, where you hold on for dear life and you tell them, you have to come get me. I have too many advantages. You have to come get me. Because with odds favorable and a clear path, if you are in at 81, there's virtually no risk, right? And where's it going? What about that big red fib in the distance? That seems like a pretty good spot, doesn't it? And if it pulls back a little bit, are the rules still met? Does it make sense to stay outside? You guys see how we're doing this? Large chart leads the way. Then if you were in at 81, you already made your 100. And momentum says where the market is likely to go. Guys, do you see how that just happened? Live in front of you. Does the software work? Absolutely. Do the fibs work? 100%. Is the methodology solid? Without question. All you have to do is learn how to trust it. And trust takes a while. Does the trader work? That's it, right? It's that loose nut between the mouse and your brain. That's okay. NASDAQ moves crazy quick, Joel. It really does. But look how the S&P did everything that it said it was going to do, right? Termination held, gap closed, all the triggers went up. Maybe not an entry for you guys. But the chart reading holds true, doesn't it? And now look at this. Weak triggers, weak triggers. This is almost the same thing, isn't it? Is it going to have the same results? I don't know. But it's the exact same lesson. Is it going to hold? It does, Joel, very much, but you have to be careful with that. So guys, look at crude right now. And let me go back to the S&P. Very similar. It's very similar. But there's no guarantees. Rule number 2 is still in effect. Weak triggers 50-50, that's not a look that's likely to break, right? Everything's above support. Large triggers are below the divergence high. There may be a different result here, but I'm not sure. So I always fall back to, are my rules met? Guys, remember that it's holiday trading this week. So the more you add in, the easier it's going to be for me to not ramble. We can always talk about what's going on in the moment. Hopefully the in the moment things help you guys. And then Joel, the exact same lesson, right? The exact same lesson. There's your pullback. What changed? Did anything change on these charts from the time of the pullback to the current, other than it kept going in the right direction? This is what you have to learn to trust, ladies and gentlemen. This is why you have to fill your spreadsheet with everything. Are you good? Go get it, Joel. But this is why you guys look at all these. This is why you take a million pictures. If you look at my my library from Snagit, it's just under 7,000 pictures, guys. Just under 7,000 pictures. So you took the trend trade, and now you're back up into trouble. I like it, Shaq. And if it doesn't break, you're going to exit rather than lose money and hope. Isn't it pretty cool that you don't have to trade based on hope? That giant red line says be aware. The NASDAQ went up. Joel, congratulations. The S&P continues to go up. And man, we're at decision point on crude oil, aren't we? Hold on. I think before we go to break, let's see if that's going to break or not. Hold on one second. None of my rules are met, but I wonder if it's going to break. Will it break? Outlook's good. Guys, I'm going to take 5 minutes and go cash out my kids' college fund because the Magic 8 Ball said yes. Just kidding. Don't trade the Magic 8 Ball. Now ask Norbert. And guys, for those of you that don't know, Norbert is our mascot. Norbert is the guy that moves the market. I want you to think of the people that make things happen as sharks, guys. And you're not a shark as much as you wish you were. I know, right? Sharks are the big money investors, guys. These apex predators move the market. They react to the areas. They create the momentum, right? We're remoras, Phil. We let this guy saw a tuna in half and then we get a meal, right? We let this guy take the leg off a surfer and then we grab a big toe. We let this guy create momentum, a clear path. And then when this guy who tried to be first distracts him with a pushback to an area, we take our chunk. And that's all it is. Guys, the sharks created the momentum. The sharks reacted to the area. The guppies jumped in because of the advantages and got paid right up to that red fib. And now we know that there's sharks swarming right here. There's seller sharks and buyer sharks fighting it out. And I have no freaking idea who's going to win. So I sit on my hands and I do nothing. Because that costs me absolutely nothing. Being flat costs nothing. Yay! All right. And now the week is complete because we saw Norbert. I'm going to leave you guys with Crude. Joel, Safia is over in the trader's room. Safia has taken her ability to read charts and turned it into a plan that is exceptional for her. But it is confusing as hell for people in here because you guys don't have the repetitions that she has. She spent 6 months learning to do what she does, and now she's absolutely crushing it. And I know that she's not a bragger, but I'll brag for her. She was number 3 in the top step. Funded accounts people. She was number 3 last week as a top earner using her methodology and her Nexgen software. And I think it was like $9,000 on 10 different accounts. So probably close to $100,000 last year or last week. Not a bad week. Hey, James Bird. Nice to have you in here. Ron, have a good one. Yeah, get ready. And then, guys, we're going to, you know that it is the holiday, right? Terminations for the win, ladies and gentlemen. It is holiday trading. So don't expect it to be as busy as last week. It's moving great, and the rules are working. Just stick to your rules. I'm not sure yet, Phil. Historically, we're closed on Black Friday. Historically, we are not open. And then, so Thursday, Friday are usually days off for us because there's nothing going on in the market. Bobby, perfect. Killing it, Bobby. Nice job. So I'll get the final answer on that. But normally, historically, if that's any indication, we won't be here Thursday or Friday. And if we are here Friday, I'll be doing it from a hotel room in Austin. So that's cool. I've done that before. Guys, I'll be back in 5 minutes. Go stretch your legs. Take a deep breath. And when I get back, it's last hour. I want you guys to lead the way. Tell me what we're talking about. If you have questions, if you have pictures, if you want to share a story about your favorite Christmas, whatever. I'll be back in 5. All right, guys, here we go. Last hour. Let's get into it. And then, Phil, there's your answer on the room Friday. I asked John. There will not be class on Friday, guys. You're going to have to take a long weekend and hang out with relatives, watch a little football, eat too much. They're still fighting, aren't they? Guys, do you think it's coincidental that there is so much fluctuation right around these key areas? I'm telling you right now, if this is your first day with us, if this is your 3,000th day with us, you've got to, at this point in today, believe wholeheartedly that decisions are made at these areas. And you just see it, right? No short trades, no long trades. NASDAQ is screaming right to resistance. And there was a beautiful trade right in the middle. And then the S&P, sure enough, there's that big red fib that we're trying to get to. And they're almost there. So, guys, it's 11:09 in the PM. AM? It's AM, not PM. What would you like to talk about? Odds favorable. You've got room to the target. Absolutely nothing to do. Termination condition reached. What would you guys like to talk about? Shaq, are there any questions I can answer for you? Who else is in here that I haven't seen in a while? GWC, did you get any on your charts? Is it better? Cam, how you doing? Good to see you in here, Nexgen Cam. If you guys haven't met Cam, he's amazing. Every time I have a question that I can't answer, he throws a link in the room. He's my little safety net. Price reached Fibonacci resistance and absolutely none of the trigger lines broke through. Therefore, it's a termination condition. Some weeks have, Gary, and some have not. I'm not sure. I'd have to look at the schedule, and I don't have a copy of it. But I bet you I could find out. Or just reach out to John and he'll let you know. And you're watching the termination conditions for crude. Which one are you watching? Support with all the triggers above it? Or resistance with the large above and the small below? See how there's more than one? And look at what the market's doing in between. It's going to break one or the other, right? It's going to break one way or the other. I have no idea which one it's going to be. I also have 3 divergences in the same price range. That creates challenges. Good morning, Safia. Were your ears burning? Good. I felt like saying nice things about you this morning. Tooted your big horn. Anyone can do it. You just got to figure out what works for you. That's all it is. And Shaq, I'm going to show you what I see. And guys, this is... If I were a betting man, and I'm not, I have every trigger above support, and I've only got one trigger below resistance. My large triggers have been unable to turn, and they're above resistance. If I had to say we were leaning one way, I would say we're leaning up. Does everybody see that? Does that make sense to everybody? Wants to replace your shoulder? Holy smokes, Gary. It doesn't mean that there's something for me to do, but can we agree that even with the red background, I've got more triggers above areas than I do below? The large triggers up suggests up more than it suggests down. That the small triggers rolling, all the triggers above support. It doesn't mean that I'm going long, but it does mean that I'm certainly not taking a short trade, even though the background is red. I don't know. You'd have to ask Gary. And I think Navy years are different than the normal people years. So it's an interesting... I like it, Shaq. That's the easiest thing to do. But I like to chart read too. And chart reading can create opinions. So I think it's important not to create those opinions. Like I can say that the bias is up, right? Because of the large triggers. But it doesn't mean that I have a trade. So it's cool just to hang out. NASDAQ had a beautiful termination condition. I mean, perfect with divergences. Yeah, it's fun. When there's nothing to do, guys, I read charts. I take pictures all the time. Look at this termination condition. Right? Beautiful. We knew that it was there. Don't know where it's going. I bet dollars to donuts. My big brother probably got in somewhere around here. Because of the great termination, because of the slowdown, because of the trigger look. Somewhere in this general range, he probably found an opportunity. And if I had to guess, knowing him, he's probably looking for this big blue line. I don't know if it's going to make it. But I can tell you that terminations are pretty powerful, guys. We'll see if it makes it. Be rooting for them. So close to the area. Man, crude oil's looking like they're doing what the S&P did. They reached that line in the sand, right? Let's see how they react. 78.15, guys, that's do or die. It's either going to break, and if they break, where are they going? That looks like a good first stop, right? And if it holds, that could be the end of it. First stop will probably be mid-band divergence low. Just got to figure out what it's going to do. I forgot. What did the 8 ball say? The 8 ball said that we were going up, right? Any questions? Any comments? Any hopes, wishes, desires? Eight ball outlook not so good. The 6 ball. I don't know. I think that the 8 ball said we were going up. There may be some. I might have to change my trading plan. And again, bad top. Terminations below. Triggers don't break. Phil, this was the one that we talked about the other day as well, right? That's the line in the sand, 78.15. It's fun though because you start to recognize these patterns over and over. You start to see these things happen one after another, and you get to the point to where you're like, "Oh man, I've seen this before." That's what on your spreadsheet, patterns that repeat. And let me see if I can find mid-band is a termination. When price reaches the mid-band and the large triggers don't follow, that's that gap that we talked about. Let's see. Price got right down towards that mid-band. Large triggers didn't follow. Sure enough, sucked it right back up to it. That's a pretty good pattern. Losing momentum on the 13.2, deeper push on the 5.1. So without momentum, you can get a deeper push. Doesn't it make sense to start to create expectations based on patterns? It's another one. I'm just going to go through, guys. I'm just going to click. Losing advantages. What does that mean? Anything can happen triggers. Loss of momentum. And sure enough, it pushes right beyond the window of opportunity. Have you guys gone through and clicked on these? 50-50 chart reading. Smalls are through, large are not. Entry conditions must be ideal. For me to take this trade, no divergence. Oh, there it is. Small window of opportunity, huge window. Guys, there is 25 years of knowledge in these based on John Novak's teachings and my teachings. Favorable large triggers, split large triggers. Great chart reading. Oh no, that one's gone. Get that one out of there. Oops. Reading divergence. Loss of momentum. Second divergence. Look for that pivot stop out before the entry. That could be handy. $50-50 no trade. Bad bottom. 50-50. Divergence prints. No trade. All day long, 3 divergence kills a trend. 1, 2, 3. Off it goes. Guys, welcome to Nexgen. I think you could spend a day going through the third page of this and come out of it a better trader. I really do. I think you could click on so many of these and just find yourself a better trader. Rules still met, don't exit. The rules are met 100% for a high probability trend trade. Becomes an add-on instead of an exit. So, good stuff. Termination still holding. Termination still holding. They're trying to get to it. So close. All right, guys, I'm going to go mic silence for a minute. Post a picture if you have a question. Ask a question. I'll be sitting here staring. I'm not anywhere. I'm just watching. I'm going to be quiet for a second, though. I don't have odds favorable momentum to the downside. I don't have favorable large triggers. I don't have areas inside of triggers. I don't have one. There is nothing that I teach in this room that gets you into a short trade there. Are you seeing something that I'm not? No, anybody. I think this is great. Guys, I love discussions like this. What color is the large chart? It's green. I'm looking for longs. Do I have odds favorable momentum? I don't. Look at how my small and large are sitting right on top of that fib. I love this because this right here that is the rare Guatemalan goose pattern. You'll notice the beak and the head, and it's being eaten by a boa constrictor, and that's it flatlining right there. How could you possibly make a decision on holding or breaking based on this? Right? Everything's green. Everything is green. So Gary, if you did take a short, you had to be aware that you're fighting the overall look at the market. You're fighting the overall general look of the market. Does that make sense? So you're reading it NASDAQ short. I'm reading uptrend with my large up, my small up, in what has been an uptrend. Does it mean that there wasn't a shot in here for maybe somebody that has a different plan? There probably was. I know there was because somebody sent me a message on Skype that said, hey, look. He probably did. I don't know where. He teaches how he would. But Pedro, one of the biggest differences between my brother and normal human beings is he reads charts with 27 years experience. He uses a couple indicators that I don't even talk about in this room, or at least one. He has patterns that he has studied extensively that create opportunities for quicker moves. And somewhere right up here, if I know him, there probably was an opportunity, and he probably managed out when things went sideways here. Made $100, $200 on a 4 lot, $400 to $800, and then got out because the large chart never said down. So he probably did somewhere in there. But it wasn't my trade. Definitely wasn't my trade. I don't have rules for it. And my brother and I bump heads every now and then because he's smarter than I am. Don't tell him I said that. He has more experience. He's got more repetitions. He's forgotten more patterns than I've learned. And I tend to stick to a more conservative approach. I tend to trade with the large chart 100%. It's easier for me. It's less painful. Because the challenge is it's not who's more stubborn. Probably me, to be honest with you, Gary. My brother is always looking for a better way. Always looking for new patterns. Always looking for advantages. And I am hard-headed and get stuck in a rut sometimes. And I've really resolved myself in my own personal training to get out of that, to begin to look for opportunities more than challenges. And guys, there's things that you're going to have to overcome in your own trading, and that's mine. I can be profitable, very conservative, and what I've realized is that I'm leaving an enormous amount of money on the table, an enormous amount of money on the table. So now I'm working closely with my brother to begin to capture that. Same way you guys could. It's pretty cool. I've been his test dummy for a while. He bounces everything off of me. And guys, I'm gonna tell you right now, this is my study with him. Let me make these so that we can see them all. Hold on one second. These are just a small part of all the annotated charts that I've just stolen from him, that he's talked about what he's teaching. And they're amazing, and I'm not allowed to give them to you. But they're pretty outstanding. And I'll tell you what, Market Replay was unbelievable this weekend. It was a lot of fun. Especially going back in trading days, trying to use his methodology on a simulator in Market Replay and comparing it to what I accomplished through my own trading plan. It's 4 or 5 times the profits, which is pretty cool, I think. A lot of opportunity. But if you don't have a solid foundation, it's going to become challenging for you. You've got to have that foundation. You've got to be able to read your charts at a moment's notice, to really do it. All of that from 09 short, right? It's just not a short yet. Just not a short yet. I'll show you guys what Nexgen's plan's been for the last 20 years. It's pretty cool. Define the termination condition. Triggers roll. We teach an HVA trade that uses market flow. This becomes your first opportunity. If everything stays strong, trend trade right to the next term, fib to fib. Rinse and repeat, guys. This hasn't changed for as long as I've known my brother. Long before I ever decided to be a trader, before I ever thought about day trading, he was explaining this exact concept to me over and over. And I'd look at him like he was speaking a different language. But it's been the same. Termination, if it's really going to be a high, the triggers are going to roll. They haven't, which means that we don't know. If it's really going to be a high, the triggers are going to roll. If it's really going to go up, that's going to break. But see how all the triggers are rolling? See how they're starting to agree? This is where a lot of you take your first shot. Because everything is above the areas. All my triggers are above. They're green. Don't have odds favorable momentum. That's your first conservative shot. And that's chart reading, guys. That's not high probability trend trading. So how do you get to where you want to be? You guys know I'm just going to recycle everything that I talk about every day, right? You got to learn the rules, guys. You've got to learn the most basic rules so that you can build your own rules. You got to be able to recognize the most basic advantages so that you can create your own list of advantages. Simulation is key. Simulation. Practice, practice, practice. The nonsense that you have to have live money to learn anything, otherwise it's fake. Guys, it's patterns. You're not trading money, you're trading patterns. You're not trading markets, you're trading patterns. If you get lucky, how do you get to where I want to be? Joel, if I catch you snuggling with my wife, you're in trouble. That's where I want to be. I want to be done with my day when she gets home. Just repetition, man. Repetition. That's it. Practicing the rules. Guys, it's easy to learn the rules. It takes longer to trust the rules. It takes longer to execute the rules. The rules aren't difficult. It does sometimes. Do you ever play golf, Joel? Or anyone in the room? Because you'll totally get this analogy. If you've ever played golf, you can go out and you can shoot. So the goal is to shoot 72. You can shoot 144. And if one of those shots were outstanding, the average Yahoo goes and buys new clubs and they're convinced that they'll be great at it, right? Because they had one great shot. I've done it. I've had the worst rounds ever. And when my wife goes, "How was golf?" "Oh my gosh, let me tell you about this par 3. I landed 3 feet from the hole. It was amazing." And then I don't tell her that I 18 putted it. But it's these little victories that you have to celebrate. It's these little memories of success, because what happens is your body tries to mimic them over and over. The things that bring you success are the things that you want to repeat. So every time you have a success, every time you take a great entry, you have to celebrate that great entry. Every time you manage it well, you have to manage it well. And I'm going to tell you right now, guys, and I can't stress this enough. If you show me a trade, that's awesome. So if you show me a trade, and I'm going to look for an example, right? Bobby's trade. And Bobby says, "I waited for everything to roll, and I get in, and I take this trade, and if Bobby gets stopped out of this trade, and Bobby forgets that he had a termination that created a full reversal, and Bobby forgets that he has odds favorable, and Bobby forgets all these things, and the only thing he focuses on is how much it sucks to lose a trade," that's his focus. And he stops focusing on advantages, and he starts focusing on the crappy stuff. "Oh, there's another one of those termination conditions. Might as well trade into it because I suck anyway. I don't have odds favorable, but I might as well take this trade anyway because, whatever." So celebrate victories, guys, and speak to yourself in terms of advantages. Speak to yourself in terms of odds favorable, momentum of clear paths. Do you want to know why, Joel? Can I tell you what your biggest challenge is? And it's the biggest challenge that we all have. Is sometimes you break your rules. That's it. I'm telling you right now, and I've told you 100 times, but you don't always hear. So show of hands, who breaks their rules from time to time? I do. My hand's up first. Mine's bouncing off the ceiling. Because I'm human. The difference is I don't kick the shit out of myself for breaking my rules. I don't let it beat me down to a point to where I don't feel like I have worth anymore. Guys, we all do it. And that's one of the biggest things that traders do, guys, is we beat ourselves up when things don't go right, and we refuse to accept responsibility when they do, right? Accountability. It's all accountability. The market doesn't do anything. You do everything, guys. The market goes up and down. You trade the patterns. That's supposed to be 2 hands raised. I like it. That's all. And if you screw up, dust off, get up, go do it again, right? Imagine Edison. Well, light bulb didn't work. Screw it. Let's sit in the dark. Or who else? How do you stop? No, the challenge is you. Joel, the challenge is us. Every one of us, the challenge is us. Every one of us. It's not our ability to understand the patterns. It's our ability to not trade anything when the patterns aren't true. That's it. And you got to work through that. That's it. Wake up in the mirror. Look at yourself. Tell yourself that you're a badass. Tell yourself that you love yourself. Tell yourself that it's okay. Talk to yourself like you're a 4-year-old that's having a rough day and you want to bring them up. And if you do that, you'll be amazed. You'll start to believe yourself. You'll start to believe that you're okay. You'll start to believe that things are all right, that mistakes happen, that it's all right to not win every trade. And you'll start focusing on the advantages. Don't trade into terms, right? Wait for odds favorable momentum. There's the Livermore quote. I do like that. And guys, that's a psychology thing. I dropped the book in here, Emotion-Free Trading. Hey, Carl, take care, man. It's good to see you in here. Emotion-Free Trading is amazing. 7 Habits. And it's one thing to read it, right? It's one thing to read it. It's another thing to absorb it, to soak it in, and to try to incorporate it, to try and work it into it, right? To visualize the success that you want to have. I've got a 1:30 tee time today. And I have already pictured myself driving straight down the fairway 100 times today. I went to bed last night hitting the perfect wedge shots in my head because my brain doesn't know that that isn't real practice. My brain thinks that I'm hitting perfect wedge shots. My brain thinks that I'm doing everything right. And hopefully it repeats it out there on the course. And I'm going to screw it up. And I'm going to hit it into the water. And I'm going to triple bogey. But I'm still going to have a tee time next week because I'm not going to give up. I'm going to hit one shot that's going to be absolutely amazing. And guys, that's trading. Large chart wins. Again, pretty cool, right? S&P made it. How many of you were long in the S&P and jumped ship from 4 small bars? Joel, you're outstanding at reading charts. I want you to become your biggest cheerleader. Who was it? Henry Ford? Oh man, I'm going to type a quote in the room. I love this. If you think you can or you think you can't, you're right. Have you guys ever heard that? That was Henry Ford. I love that quote. And there's probably nothing more true in my life. If you think you can or you think you can't, you're absolutely right. So you might as well think you can. That's a good one. Joel, I enjoy having you in my class. Termination's still holding. Termination's breaking. All the triggers got above it, didn't they? Price breaks, pulls back. It's not great momentum, but it's a clear path. What else can I share with you guys? Minimize your learning curve. Post pictures of your trades in class. Every trade, win, lose, or draw. If you win, then the rules are wrong. You may have a short-term victory, but a long-term failure. How are you going to know the difference? To be sure, you need feedback from us. We're here to help. If you place a trade on the simulator, participate in class, there is no risk. No risk of loss or capital. You need someone to tell you what you did right or wrong when you're new. It's part of the educational magic, guys. This is what we do. This is what I do every day. This is what I love to do. I'm passionate about what I do. I love teaching people. The only way I get the opportunity to teach you, though, the only way that you get the most out of this class is if you post pictures, guys. You have to post pictures. You have to say, hey, Mark, this is what I did. How do I do it better? Mark, this is what I did. Did I do it right? Hey, Mark, here's my rules. Did I do it right? That's it. And I'm going to show you guys something in regards to pictures. What is today? The 20th? So right here is the first trade, or the first picture I took of a trade. And I took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 pictures. Nope, 15, 16, 17. I took 18 pictures of the same trade, guys, from entry to exit. 18 pictures. 18 pictures that I annotated mid-trade. Just saying, there's a lot of opportunity for you to learn more and more and more. DJ, termination, man. So let's talk annotation. What do you say? Will you do me a favor, DJ? Will you just give me a Y in the room? Or an N? Is that a good top? Let me show you how easy this is, guys. That's a good top, right? That's a termination that creates a full reversal. You're going long, aren't you? We're in a downtrend. I have odds favorable momentum to the downside. I have immediate momentum to the downside. What? Just curious. Did you go long at support with no triggers through and your large trigger's a full bar away with a close on the correct side of the small? At first glance, I thought you went short. Guys, this is chart reading. The termination did its job. It took them all the way down to the mid-band, all the way down to support, and the large triggers didn't follow completely. There was room for an entire bar. And DJ, you took the long, right? You took that one right there. You're still in. Was that NASDAQ? What chart are you on? That is NASDAQ. 16017, 15996. Our charts look very different. Let me see something. Do you have, hold on. Our charts look very different. Are you running different indicators? I'm putting the 13.2 on there. No, it's not market flow. So mine never blinked from the area on my 34.5. I am suspicious that you may have a 13.2. Nope, it's not a 13.2. I'm trying to figure out what you have on your large chart that caused it to turn so fast. That's not it. Because this is John Novak's NASDAQ chart. $34.5. Yeah, your triggers are a lot faster than mine. And that's okay. This sets you up beautifully. This support with my look would have set you up even better, I think, right? Now I'm starting to get a roll. Now I'm just now starting to get a roll on that chart. So you had the advantage. I mean, even more so from here, you had a fib with these triggers so far away. It's a great long. It's not a high probability trend trade long, but it's a great look at closing the gap to those triggers. And it went back and retested right up to resistance for you. I like the trade. It's a little confusing because our charts look totally different. My chart even supported it even more. When you hit your target. or when conditions change. So if you got long right here, how long are you willing to hold it? Right? Multiple divergences, back to fibs. That's your entry. We saw that one. What happened after? And I can't tell you how to take your trades. I can't tell you when to exit. You can show me a picture after the fact, and I'll happily give my feedback. But mid-trade, I can't give you trading advice. I don't give trading advice. I can't. It's illegal. So you can show me after your exit. We can talk about things that happened. But in the moment, if you're in a trade, guys, I can't tell you what to do. I know when I'm in trades, if I'm in a long trade and I hit a big red fib, that's a nice exit for me. Even if it keeps going, that's a nice exit for me. If I'm in a short trade and I lose all my momentum, I may exit. If I hit a big blue fib, right? Look at that. It's happened on every market today, hasn't it? That's the same look that happened on the S&P and crude oil. If it's really going to be a top, things are going to roll. If it's really going to be a top, things are going to roll. And what did crude do? Oh, they're trying, aren't they? Man, they're trying. So DJ, when you exit, show me a picture. Let's see what you do. Your charts are so different than mine. It's interesting. We can talk about your targets. Your targets. First one's the pullback to the large triggers. Pull back to the large triggers. That's the same picture. Hit copy again on it. That's the same picture that you've shown a couple times, I think. Either that or there's something wrong with your NASDAQ. If that's all it's moved, can you show me a timestamp? Because this is what my NASDAQ has done since the time it was at that point. It's done all of that. Something doesn't feel right. Do you see the difference? If this is, can you show me a timestamp? Because from 1607.18, which is right here, I've gotten all this movement. Just take a picture. When you take your picture, drag it all the way down so these timestamps line up. Something doesn't feel right. Because if you've only got 5 bars, look at all the bars that I've gotten here. In CAV, you're going to take that long, 50-50, no divergence, pull back, giddy up, huh? And then Joel. So here's Joel's NASDAQ. Things are rolling off the 34, directly into support, directly into support. Kind of hard to take a trade with all the triggers above support. Just chart reading. That's weird, DJ. I don't even have the beginning of an answer, though. That's most current. 11:48, 11:15. So in 30 minutes, you got 6 bars on your small chart. And then from 11:15 to 11:48, these are my bars on the small chart. Something is weird. Can you do me a favor? Can you right click and go to data series? Let me see what you're working with there. And if you have it set up this way on purpose, then ignore me. But something seems really strange because that's everything in the time frame compared to what you have. So maybe you've got a 13.2 chart. Let me see something. What if I load a 34.5 template on a 13.2 chart? Maybe that slows it down. Just take a picture of it for me, of what it says. Pop it in here. Yeah, even that's not the same thing, so. Last and critical 13.2, tick replay 10. It all looks normal. DJ, it's odd, brother. Because that's it. It's like your NASDAQ isn't moving. I might suggest, is that what it, AB, you're going to come in and help me out. Thank you. The account is SIM, which shouldn't affect it, unless maybe it's delayed or something. There's a NASDAQ with faster small trigger settings. Yeah, but even that's not going to look like this. It's not going to create 5 bars. The triggers will be faster, but 5 or 6 bars in 30 minutes on the NASDAQ is unheard of. So DJ, I'm not trying to voodoo you, but I might get with Jason. And show him the picture and show him this picture. And go, Jason, Mark said that the NASDAQ probably shouldn't have only 7 bars over 30 minutes, 40 minutes. And something might be wrong. And I think that would be worth the price of admission, which is absolutely free with Jason. As it seems a little off. And with that, we made it to noon, guys. Good job. Did I get everybody's pictures? I think I did. Thanks, Joel. Guys, it was a good one. I enjoyed it. We're getting into that holiday festivities, right? So it's going to take a little more sometimes, more decisions being made. The guys that do this professionally, they're already on their way to grandma's house over the river through the woods. So if you trade well, have fun, do lots. And guys, I'll be back tomorrow morning. We're going to do it again. It's a short week this week. So we're going to get as much as we can. I don't want you to be shy, especially if you're on demo. Guys, be very, very vocal. Be very, very aggressive and stingy with your time in class. Let it be your time. There will be a class on Wednesday, Cav. We may cut it short on Wednesday. It just depends on what the market's doing, to be honest with you. And then Thursday and Friday, we are off for sure. And then historically, at the end of the year, from Christmas to New Year's, Nexgen takes family time. So bring the wine. I wish I like wine. It always seems so cool. But guys, I'll be